Hello, and welcome back to Money Moves Daily, your essential guide for navigating the financial markets. It's Friday, September 5th, 2025. I'm Sophia Reyes.
And I'm Jason Mueller. Sophia, the markets are certainly keeping us on our toes this morning, with the S&P 500 hitting a new record high, but there's a huge story brewing with the Federal Reserve that could shift everything.
Absolutely, Jason. We're diving deep into the near certainty of a Fed rate cut this month and what that means for your money. We'll also break down why big tech is soaring, and then in our quick hits, cover everything from a major energy company's workforce reduction to Salesforce's latest earnings.
Plus, we've got the crucial details on today's jobs report, which could really set the tone for the coming weeks. So let's get into it.
All right, Jason, let's start with the Federal Reserve because all signs point to a significant shift in monetary policy. We're seeing an overwhelming market probability, around 87 to 90%, that the Fed will cut interest rates by a quarter percentage point at its upcoming September 17th meeting.
Okay, rate cut. For our listeners trying to figure out if they should refinance their mortgage or what this means for their savings account, what exactly is driving this move now? Is it a good sign or a bad sign?
It's a nuanced picture, but largely a response to a weakening labor market. Fed officials, including Governor Christopher Waller and Chair Jerome Powell, have openly signaled support for this cut, citing concerns about downside risks to employment. We saw a disappointing July jobs report with only 73,000 jobs added, significantly below the 110,000 forecast, and previous month's data were revised downward. Essentially, with inflation now near the Fed's 2% target, the focus is shifting to protecting the job market.
So the economy is strong enough for the S&P 500 to hit a record high, but the Fed is cutting rates because the job market is looking shaky. That's a lot for people to reconcile. What does this practically mean for an everyday investor or homeowner?
Precisely why it's so critical. This would be the first rate cut in 9 months. For homeowners, it could mean a slight dip in mortgage rates, and for those with credit card debt, potentially lower interest payments over time. JP Morgan Research, for example, now forecasts this September cut with 3 more 25 basis point cuts expected at subsequent meetings, aiming for a target rate of 3.25 to 3.5% by early 2026. It's the Fed trying to preempt a deeper slowdown.
Interesting. Okay. Let's shift gears to something that's definitely been on everyone's screens. I saw headlines about Apple and Google just soaring.
What's behind this massive surge in big tech, and how did it contribute to the broader market hitting those record highs?
That was a fantastic question, Jason, and it's a huge story out of the tech sector. Both Apple and Alphabet, Google's parent company, saw significant gains yesterday, with Apple shares jumping almost 4%. This surge came after a U.S. court ruled in favor of Alphabet, upholding their long-standing agreement for Google Search to be the default search engine on iPhones and other Apple devices.
So a court ruling basically secures their existing deal? How big is that deal, and why is it making such a difference to their stock prices and the market as a whole?
This ruling is massive because it preserves an estimated $20 billion annual revenue stream for Apple, paid by Alphabet for that default placement. For both companies, it removed a major cloud of legal uncertainty that had been weighing on them for months, and investors reacted very positively to that clarity. This strong performance from key tech players directly contributed to the S&P 500 closing at a record high, alongside strong gains from companies like Broadcom, Amazon, and Meta Platforms. It shows the incredible leverage and influence these tech giants still wield.
$20 billion just for a default search engine. That's incredible. All right, let's move on to our quick hits because there's always more happening in the financial world. Sophia, what else caught your eye in the past 24 to 48 hours? In our quick hits, first up, energy giant ConocoPhillips announced plans to cut up to a quarter of its global workforce, impacting around 3,250 employees as part of a major restructuring effort.
Wow, a quarter of their workforce is significant. That's a tough move in the energy sector.
Absolutely. Second, in corporate earnings, Salesforce saw its shares slip despite beating earnings estimates. The market reacted negatively to a softer revenue outlook provided by the software-as-a-service firm.
Always a head-scratcher when a beat isn't enough. What else?
And third, Nippon Steel has officially resolved all legal disputes with the United Steelworkers Union and Cleveland Cliffs. This clears the final hurdles for its $14.9 billion acquisition of U.S. Steel, a deal that officially closed back in June.
So that industrial giant merger is finally fully settled. Good to see some clarity there. And finally,
in the global EV market, shares of Ola Electric declined by 4% after SoftBank Group trimmed its stake in the company.
another example of investor sentiment impacting high growth but often volatile sectors. Global EV shifts, corporate restructuring, and big tech regulatory wins, a busy week indeed. Now, looking ahead, Sophia, what's the one thing everyone needs to be watching today and into the weekend?
The absolute must-watch event is happening today, Friday, September 5th, at 8:30 a.m. Eastern Time. We get the highly anticipated U.S. employment report, including the non-farm payrolls, unemployment rate, and average hourly earnings. This report is considered a very high market impact event.
And why is this specific report so critical, especially after all the Fed talk we just had? What numbers are we looking for, and how could they move the markets?
It's critical because it will either confirm or challenge the Fed's assessment of the weakening labor market, which is a primary driver for their potential rate cut this month. Analysts are expecting non-farm payrolls to rebound to around 120,000 jobs after July's low figure, with the unemployment rate slightly improving to 4.1% from 4.2%. Any significant deviation from these expectations could cause major market volatility and heavily influence the Fed's future policy decisions.
So the market is literally holding its breath for today's numbers. Very important to keep an eye on that. All right, Sophia, as we wrap up, what's the key takeaway you want our listeners to remember from today's Money Moves Daily?
The big takeaway, Jason, is that we're navigating a market that's both celebrating new highs in some sectors while simultaneously preparing for a significant policy shift from the Federal Reserve, driven by a cooling labor market. Staying informed about these intertwined dynamics is key.
Great advice as always, Sophia. That's all for today's Money Moves Daily. A huge thank you to all our listeners for tuning in.
We appreciate you joining us. Make sure you subscribe wherever you get your podcasts so you don't miss a single episode, and leave us a review to let us know what you think.
Until next time, keep making smart money moves.